Alright, ladies and gentlemen, welcome back. And in this video we're still going to talk about the trade bracket strategy. Okay, and before we begin, I want to mention the disclaimers. Okay, I want to mention two disclaimers. Okay, the first disclaimer is trading is very risky and you can lose a lot of money. All right, this right here is not financial advice. Okay, what I'm telling you in this video is not financial advice, so trade at your own risk. Okay, and the second disclaimer is I don't do account management, I don't do investments, I don't inbox people asking for money. All right, so be aware of scammers. Okay, then lastly, what I want to share or what I want to talk about before we go into the video is, if you're finding trouble understanding anything that I'm going to be talking about in this video, okay, then you should go ahead and watch the very first two videos that I did post. Okay, or the two videos that I did make, the very first two videos that I did make go in depth when it comes to explanation. They explain the ins and outs of this strategy. So if you're finding trouble understanding anything that I'm gonna be saying in this video, I'm gonna be leaving the links to those two videos in the description. Okay, so you should go ahead and first watch those two videos before you watch this one right here. And with that being said, let's begin. All right, so the strategy begins on the 4-hour time frame or the higher time frame. And the reason why I want to begin on the higher time frame is we want to know the directional bias of the market. We want to know the overall directional bias of the market. Okay, and as you can see, price made a push. All right, made a pullback, then made a push. Okay, and until this point, price created this break right here. Okay, on the 4-hour time frame. Okay, so let me go ahead and mark this structure right here. So this right here is the 4-hour break. All right, and this right here will be our 4-hour higher low, and this right here will be our 4-hour higher high. All right, so as soon as it created this break, this right here proved to us that the overall directional bias of the market is to the upside. Okay, and if the overall directional bias of the market is to the upside, we're only looking for buys. Okay, we're only looking for buys. Okay, all right, so what do we expect now? So we anticipate the market to make a pullback. Okay, and then we expect the market to make a push to the upside or the continuation to the upside. Okay, now like I always say, this pullback right here is the heartbeat of this strategy, because this is where, when we go on a lower time frame, because we're gonna go later on the 15-minute time frame, and on the 15-minute time frame, this pullback right here will be in a downtrend, and this is what confuses so many traders. Okay, because when they see this pullback right here, when they see price making this downtrend, making lower highs and lower lows, they think the directional bias of the market has changed. No, guys, don't get confused. Okay, this is just a pullback so that the market continues in its intended direction, which is to the upside. Okay, so remember, one thing you need to remember is the overall bias of the market, okay, is to the upside. Okay, and we identified that as soon as we got this break. Okay, so this pullback right here will just be making this mini downtrend, so it will have the characteristics of a downtrend, which is lower highs and lower lows, lower highs and lower lows. But that does not mean that the overall direction of the market has changed. Okay, all right, so now I want to go to the 15-minute time frame, and I want to mark the market structure of this pullback right here. Okay, so let me go ahead and delete this. All right, so go ahead and delete this. Okay, then I'll go to the 15-minute time frame, because remember, on the high time frame, we wanna identify the directional bias. Then we want to go on the lower time frame for us to make our entries. Okay, so we enter on a lower time frame, which is the 15-minute time frame. So let me go to the 15-minute time frame. All right, so I'll need to scroll back And like I keep saying, guys, you need to test this strategy first on your demo account. Okay, don't just go in straight, placing trades on your live account before you back test this strategy. Okay, so first back test this strategy, and when you're comfortable with the whole strategy, then you can actually go ahead and start using it on your live account, guys. Okay, all right, so let me keep scrolling back until that point where we marked our structure on the 4-hour time frame. So this is the structure we marked on the 4-hour time frame. Let me hope you remember that. Okay, price made a push, pull back, push, created this break right here. Right, so what we want to do next is we want to mark this pullback right here. We want to mark the market structure of this pullback, guys. Okay, and this is very important. You want to learn how to mark your market structure. Okay, I'm just gonna go ahead and grab this tool right here. All right, so price made a push. All right, made a pullback, made a push, pullback, push. All right, pullback, push. All right, pullback, push. All right, all the way down here, pullback. All right, made a push all the way down here. All right, pullback, then made final push. All right. Alright, so until this point, I'm going to go ahead and mark the structure point. So I'm going to go and grab our text, okay? So this right here will be lower high, okay? And since I don't want to do it again, I'm just going to copy and paste this, okay? So I'm just going to go ahead and Control C on my keyboard, Control C and Control V, right? And I'll keep pasting and pasting so many instances, okay? Alright, so let me drag this. This right here will also be lower high. So here will be lower high. So here will be lower high. And this right here will be lower high. So is this right here. Alright. And that's it. So I'll go ahead and just delete this because I don't need this. And now I want to mark the lower low. So grab my text. And this right here will be lower low. Alright, same thing. I want to go ahead and copy and paste, okay? Control C, Control V, Control V, Control V so many times so that I get so many instances, okay? All right, so just go ahead and just drag this right here. Drag this right here, lower low. This right here, lower low. All right, this right here, lower low. This right here will be a final lower low, okay? Now go ahead and just delete this, all right? Because I don't need that. All right. I made a couple instances. Okay, there you go. All right, so now remember our strategy comes into play since the price was pulling back to the downside. Okay, our strategy will come into play if the price comes back and breaks the last lower high to be created. Okay, so let me go ahead and mark this. Okay, so this right here will be the last lower high that we should be interested in. All right, then this right here will be the highest point, which will be the take profit. All right. So now I want to mention something before I continue, because this is where we're gonna, because now according to the strategy, as soon as we get the break of this last lower high, we will draw our trade bracket and go ahead and measure this setup to make sure it is at least a 1 to 2 trade. Okay, if it's not a 1 to 2 trade, we are not taking the trade. Okay, so make sure you remember that. Okay, and after we measure, if it meets that criteria of being a 1 to 2, okay, then we should go ahead and place our pending order. Okay, but before that, I want to talk about the use of pending orders and alerts. Okay, so we want to use alerts and pending orders so that we trade this strategy more efficiently, guys. Okay, all right, so let me go ahead and grab my cross tool right here. Okay, and I want to show you. So price, the pullback started from right here, and I want you to stare down where the date is and the time is. Okay, and as you can see, it says Thursday, September 25th, okay, 2025, and the time was 15 minutes past 5 p.m. Okay, so that's where the highest point was, okay, around that time. Okay, then the lowest point happened, okay, Wednesday, October 1st, okay, 2025, quarter past 7 a.m. okay, and then the break happened around All right, the break happened around this time. Okay, Wednesday, October 1st, 2025. Okay, a quarter past 10 a.m. Okay, and as you can see, the reason why I made that comment, or I made those comments, is you can see this pullback right here and the break. This takes some time, and you don't want to be on your charts the whole day, or for that whole time for you just to wait for this price to pull back and for you to get this break. No, guys. Okay, this is where the use of alerts comes into play. You want to use alerts to your advantage, guys. Okay, and what you will do, you will come up with a time interval at which you will be checking your charts. Okay, so let's say this right here is up to you. Okay, so you can say I want to check my charts after 7 hours, 8 hours, or even 6 hours. All right, but whatever time interval you come up with, okay, you want to be, so let's say price, as soon as you get this break on the higher time frame, let's say you went with 7 hours. Okay, you want to check your charts after every 7 hour interval. All right, because you don't want to stay on your charts. This is not a 9 to 5, guys. Okay, you don't want to be sitting on your charts just to wait for all this to form and get this break. Okay, so let's say you chose 7 hours. You want to be checking your charts after every 7 hours. Okay, and let's say after 7 hours price was right here. All right, so this right here would have been the last lower high, and this is where you go ahead and place your alert. Okay, so you go ahead and place your alert right here, right? Hoping that if price comes back and triggers that alert, you will receive a notification either on your mobile phone or through your email. You could go ahead and set it up. Okay, if you don't know how to do it, you can refer to the two videos that I keep referring to. The links will be in the description below. Okay, so let's say price was right here after 7 hours. We're just assuming this. Okay, so you will open your charts. Okay, and this right here will be the last lower high to be created. So you go ahead and place your alert right here, because you want as soon as price comes back to that point to be triggered, and then you will receive a notification. Then you come back, because as soon as price hits that alert line, you know that our strategy is in play. Okay, so you set your alert, close your charts, and go do something else. Okay, so let's say after 7 hours, okay, we're just assuming price was right here. Okay, price came all the way down here. Okay, so that means price didn't rise up to hit your alert. Okay, instead it just continued all the way down. Okay, so you will open your charts, and let's say this right here, because if price was right here, that will mean that this right here will be our last lower high. Okay, so you go ahead and delete the alert that you placed here previously, and then you place your alert right here. All right, now this is what I want to talk about, because now as you can see, price rose all the way up and then it hit your alert. Okay, so let me go ahead and first place the alert. So if you want to place the alert, you just click this clock looking like icon right here. Okay, so just click that clock looking like icon, then you go ahead and it will pull up this window, and just go ahead and click create alert. All right, so it will pull up this alert window. All right, and what you want to do is, since we put the line on the last lower high, all right, to be created, and it has a value right here, so this is the value you want to put in right here. All right, this is the value that you want to put in right here. Okay, so let me go ahead and just put in the value right now. So just go ahead and just I'll just delete this. All right, so delete this. All right, so it's 79701. All right, so that is the value that I want to place. So just click right there, so it will place it. So let me just go ahead and just minimize this, because I need some more. So the alert line is that white dotted line, as you can see it right there. Okay, so I've just placed it on my chart. Okay, so if price was right here, it will rise all the way up and then hit your alert line, and you will receive a notification as soon as price hits that alert line. So the alert will be triggered. Okay, so you will receive notification either through your phone or through your email. Okay, depending on how you set it up. Okay, now I want you to be very careful, guys, and this right here is a perfect example. Okay, as you can see, price rose all the way. This candle right here pushed all the way up, and it just wicked up and then closed below it closed below, it didn't close above the alert line. So this right here is considered to be a fake breakout. Okay, you need to know that there are fake breakouts and real breakout. A real breakout is when the body of the candle closes above these alert lines. So this right here, the candle just wicked. As you can see, this wick right here, this right here is called a wick, and this right here, the shaded part, is called the body. Okay, and the wicks can be either side, it could be on the bottom, on the top. Okay, so as you can see, price just wicked and then closed all the way down. So this right here is a fake breakout. Okay, so this is not, you will not consider this to be a breakout. Okay, but remember, since it wicked, since it reached that point, you will receive a notification. So what will you do? You come to your charts, and then the first thing you want to do is confirm, is it really a breakout? If it's not a breakout, you will remove this alert line and place it again, because you want to get this break right here. So this right here will be the valid break. So as soon as you get this break right here, this will be the valid break. Okay, and as soon as you get the valid break, so you're done with the alert. Okay, so you just go ahead and just, you know, delete this alert. So you just go ahead and just click right here and, you know, go ahead and just click delete, and you don't need this blue line anymore. Okay, so as soon as you get the break, what you want to do is draw your trade bracket. So let me go ahead and just grab this rectangular tool right here, then just highlight my trade bracket. Okay, first things first, I'll just go ahead and just label this as the trade bracket. All right, so this right here is the trade bracket. Okay, and remember, the trade bracket gives us two things. Okay, the trade bracket gives us our entry, okay, and it will also give us our stop loss level. That's what it gives us. Okay, and there are two ways in which you can draw your trade bracket. Okay, so you could draw your trade bracket from the last lower high to be broken to the last lower low to be made, or you could draw it from the last lower high to be broken to the last point price reached. Okay, and both of those ways have disadvantages and advantages. Okay, so if you draw it from the last lower high to be broken to the last lower low to be made, you will have a higher risk to reward ratio trade, but the chances of price coming back to your trade bracket, okay, chances of price coming back to your trade bracket, taking you out, okay, and continuing in your direction, okay, so you will have a possibility that price can come back all the way, take you out, because your stop loss will be right here, and then continue all the way up. The chances will also be higher. Okay, now if you draw it from the last lower high to be broken, okay, to the last point price reached, okay, you will have a lower risk to reward trade or a lower risk to reward setup, but you will also have a lesser chance of price coming all the way down, taking you out and continuing in your direction. So that's one thing you need to know. Okay, all right, so now let me just drag it back to where to the last lower low to be made. All right, so now the next thing, as soon as you draw your trade bracket, the next thing is you wanna measure your trade. Okay, because according to the strategy, guys, okay, we are only taking trades that are at least a 1 to 2. If it's not a 1 to 2, leave it alone. Okay, just close your charts and wait for another setup. Okay, so let me get my long position tool. Okay, so I'll get my long position tool and I'll place it right here. So this right here is where our entry will be, and this right here is where we will place our stop loss. Okay, and this right here will be our take profit. Okay, and as you can see right out of the bed, guys, okay, the risk to reward ratio is a 1, so it says 1.48. so in other words, this right here is a 1 to 1.48. and like I just mentioned, guys, and the reason why I actually made this video is to just show you this, okay, because this is a trade you will not take, guys. Okay, I just wanted to show you the possibility of such trades. So such trades exist, okay? And what will you do? You will not take this trade, guys. If you want to be a successful trader, guys, you need to follow your trading strategy, okay? Because you would have back tasted that strategy, okay, and you would have come up with criteria that you need to follow, okay, of that trading strategy. And that trading setup, like this one right here, needs to meet all the criteria. It needs to tick all the steps of the strategy. If one step or criteria is missing, just let it go, guys. Leave it alone. Wait for another setup. That's the reason why I showed you this trade right here. So this trade right here is a trade that you would not have taken, guys, and these trades happen so often. All right, if you want to be a successful trader, guys, okay, you need to be very patient and you need to be disciplined, okay? Those two aspects, okay, patience and discipline, will guarantee your path to becoming a successful trader, okay? All right, so this trade right here, like I said, this trade right here didn't meet our at least 1 to 2 risk to reward ratio criteria, so we would not take this trade. This trade is not eligible for us to execute, okay? So we will not take this trade. Let's go ahead and wait for another trade, okay? All right, guys, so I said everything I wanted to say, and I'm gonna end this video right here. But before I end it, make sure you subscribe to my channel. All right, make sure you turn on notifications so that you receive notifications every time I post a video. Make sure you like, share, and comment, and I'll definitely be seeing you in another one. All right, bye.